The dollar index tells you everything, and once you understand it, you'll be able to get the bias right for every single market. And without the dollar, you're almost trading blind. So in this video, I'm going to show you how you can use DXY to become a consistently profitable trader. Okay, so the first thing you want to do when you're analyzing the dollar is you want to get DXY up, right, on TradingView, DXY. So make sure you have this up. It should say US dollar index, and this is the one you want. You can also do the exact same analysis on DX, which is the US dollar index futures, which is actually more reliable. But for this video, we're going to do it on DXY. It's basically the same thing. So what you're going to do is you're going to get the weekly chart up for the dollar, because what we really want to do is we want to see where dollar's likely to go. Because if we know where the US dollar is likely to go, we'll know where every other market is likely to go to. I know that sounds crazy, but I'll show you why that is later on in the video, right? You know, all the markets move based off the US dollar, because right now, as I'm recording this, and probably for the next few years, or foreseeable future, the US is by far the richest, most powerful country. And you might not like that, but that's a fact, right? And these financial markets are going to move based off what the US economy is doing. And that right there is essentially summarized by the US dollar. So the US dollar is absolutely king. Now, what we want to do is we want to get on the weekly chart, and we want to look for the most recent bit in price action, right? The most recent swing. I say swing, right? In terms of just the most recent bit of price action. Where has price gone recently? Now, what I mean by this is, I don't care about this bit of price action on the weekly chart, right? I have no care whatsoever about this. What I care about is this swing here, right? Can you see the most recent move was really from here down here, right? Now, obviously, this is a bearish move, right? It's not a bullish move. It's a bearish move. Dollar's dropped, right? And now it looks like it's consolidating a bit. But we know the last few weeks, or really ever since the beginning of the year, dollar has dropped, right? It's been very bearish, right? For whatever reason, it's been very bearish. So I just want to study this price action a bit more, right? Just going to get on the daily chart very quickly, because I just want to show you this. And when you're using the dollar index, is you don't want to go below the daily chart, because you really don't need to. But if we just read the price action here, can you see how dollar dropped? Comes up again into this fair value gap. Comes up again into the order block. Again, and can you see how we just take liquidity? And now what we're doing is we're consolidating. And of course, we always care about the most recent bit of price action. So we care about this bit of price action, not this fair value gap all the way over here, right? We care about what's going to happen next. So this is where we are in price action. So let's just clean this off. What is price likely to do next? Now, do you know how we said on the weekly chart that we're bearish and we're going down? That's obviously the most important part. However, what is price likely to do here? Now, this is where trading can get pretty difficult. And I say this to my private students all the time. And if you've been trading for any length of time, you know markets do not move in straight lines. So even though we're bearish, you know, markets are always going to have retracements. And retracement aren't always going to be nice, clean, sexy, you know, retracements that you can just, you know, sell on the fair value gap and ride price down, right? It can be quite messy, and you can see this here. So what is likely to happen if you're asking, oh, Atif, you know, what is dollar likely to do next? It probably, in my opinion, is likely to take out, you see liquidity at these highs here. And for those who don't know, liquidity is simply stop loss orders, right? At major highs, major lows on the higher time frames. And can you see this fair value gap here? Let me just mark this out, right? Now notice the wicks fill this fair value gap here. Right, so this is the only remaining part of the fair value gap. In my opinion, it's likely for dollar to continue upwards, take out all these highs, hit this fair value gap, and then who knows what they'll do afterwards. I think probably it's going to continue lower and drop down, right? And of course, if we look at the overall trend, it's been bearish, right? So very realistic that the dollar will probably just come up, take out liquidity, hit this fair value gap, and continue lower. So what does this really mean, right? What am I really doing all this analysis for? If we just get back onto the weekly chart, what I'm really saying is dollar is bearish, right? That is the overall market trend, bias, top-down analysis, which we've just done in the last like 2 or 3 minutes. We are bearish on the US dollar. Now, what does this mean for us as traders? So let's get up other markets. So let's say, for example, you trade euro dollar. Now, most people don't even understand Forex, who are Forex traders. Do you know how everyone says pairs, that you trade pairs? What they really mean is you're actually trading two currencies. So euro dollar, you're trading the euro, obviously the EU currency, against the United States dollar. So if the dollar, which we've just said here, is bearish and going down, what do you think that means for euro dollar? Right? Do you think euro dollar is going to go up? Do you think it's going to go down? Or do you think it's going to just consolidate and do nothing, right? If the dollar's going down, what will happen to euro USD? Right? Have some time to think about it. Let's get the charts up and see, right? So we get the charts up. Look at that. Almost the complete polar opposite, right? Can you see this? Let's get it up again. Here's Dixie. Here's the dollar dropping massively. Euro dollar. Let's get it up. Look at that. Euro dollar. Massive explosion in the other direction. So what does this really mean? Dollar tells you everything. Now, what I mean by that is if the dollar's bearish, euro dollar is going to be bullish, right? Let's look at the S&P 500, right? S&P 500 also going to be bullish. Now, some people are going to ask me, hey, Steve, you know, this isn't a forex pair. It's not against the US dollar. So why is it going up, even though the US dollar's gone down? Essentially, what happens is, obviously, the S&P 500 is the 500 biggest American companies. If the dollar goes down, it means the whole world can buy US companies, or can at least buy their products a lot more cheaper. Again, not going to talk too much about this. So the US dollar, if the US dollar drops, it means that the US products are cheaper for the whole world. So US exports go up massively. So US companies make a lot more money when the dollar drops. And if they're making a lot more money, they're going to become more valuable. S&P 500 is going to go up. NASDAQ's going to go up. All the major markets are also going to go up. Now, what does this mean for gold, right? XAU, USD, and what that really means is gold against the US dollar. If dollar's dropping, what do you think gold's going to do? It's going to go up. Oh, and it's at all-time highs, right? So this is what I mean when I say dollar tells you everything. So we have the dollar being bearish. What that means is, by definition, all these markets that are pegged against the US dollar and even the S&P 500 are going to go up. Now, that alone is not enough to make money, right? Like, how do we actually make money from this? You probably think, okay, Atif, that sounds cool. How do we make money from this? Number one, that right there essentially gives you your daily bias. You do want to do a little bit more analysis on the actual market itself. So, for example, we have euro dollar, and we also have, let's get this up. This is the New Zealand dollar against the US dollar, right? So obviously, if the dollar's dropping, New Zealand dollar USD should go up. Look at this bit of price action, right? Just study this bit of price action here. Look at this strong bullish move here. And then look at this here, right? Look how much weaker this is. So what this really means is the New Zealand dollar itself is also very weak. So the US dollar is more weak, but the New Zealand dollar is also weak too. So you have two weak currencies. And when you have two weak currencies together, you're going to get chop and you're going to get awful price action. I talk more about this to my private students. What you really want to do, the TDLR, or the takeaway from this, is just to avoid, right? Avoid this market. Do not trade this whatsoever. Euro dollar is the one you want to look at. And you can just do a tiny bit of just analysis here, and if we just zoom out, this fair value gap, for those who are wondering, and depending on whenever you're watching this, this is what I think is probably likely for euro dollar, right, to continue upwards. Tap this fair value gap and then go down. Can you see this 1.2 big figure? That is a massive draw on liquidity, right? That is a huge sign in price action, and you can imagine euro dollar hitting 1.2 big figure, and this will be a lot of news announcements, right? Because when was the last time? This is 2021, so what would that be? 4 years. So once euro dollar hits the 1.2 level, that'll be the highest that euro dollar's been in 4 years. And you can imagine that being on the news, and you know, people saying, oh, Donald Trump's ruining the US economy, dollars dropped by 20%, whatever. But very likely that euro dollar's likely to come to this 1.2 big figure and hit this fair value gap. So what the dollar really tells us is, it tells us a direction for all the markets, right? The dollar tells us everything. If the dollar's bearish, all of the markets are going to go up, right? Now, some markets, like euro dollar, are going to be a lot more stronger than, say, the New Zealand dollar, right? So this is where you do your daily bias, top-down analysis on the actual market. However, what you're doing is you're looking for confirmation, right? I'm looking for you notice how as soon as I got onto the euro dollar chart, I had no intention of looking, you know, at this bearish fair value gap. I'm just looking for more proof that euro dollar's bullish, right? So that's what it really does. The dollar gives you your confirmation, your daily bias, and then when you get onto the actual market itself, you want to look for confirmation, you know, in the most recent bit of price action. So if I show you what that means on the daily chart, because that might sound a bit confusing. You see this? See how price slowly comes up? A little bit of a retracement, probably hit this fair value gap here, continue up into this big weekly fair value gap. Right, that's what markets are likely to do. So that's really how you use the dollar index. It should always be the first thing you do in your analysis. So whenever I get onto the charts, right, TradingView, first thing I always do is I look at Dixie. I want to see where Dixie wants to go. If it's bearish, I want to look for confirmation on the markets I trade. So for example, euro dollar or XAU USD, I want to look for confirmation on the actual pair itself that it's also bullish. And then I look for my entries. Now, if you want to learn more about entries, go check out this full playlist where I give you everything you need to know about the BSC strategy, which is by far, hands down, the best setup in all of trading. So you should see the full playlist on screen now. And if you want to learn more about psychology, BSE, everything you need to become a consistently profitable trader, go check out the pinned comment down below and you'll find a free private training that will make you profitable.